Jon, thanks so much for joining me on the podcast. How are you today?
Doing good, doing great. I'm glad to be here. Thanks for having me on.
Excited to have you. This is your first time coming on the podcast. So, typically, what I like to do with first time guests is give you a little bit, say a minute or so, to talk about your background and then give us an overview of Lendflow.
Certainly cool. Happy to do that. It goes back pretty far. Certainly a long story to get to where we are with Lendflow, but I'll try to keep it short and succinct. I was back in the day a big gamer, and in college built a lot of different websites and little applications and things like that. And one thing led to another as far as sparks along the entrepreneurial journey. And ultimately, that led me into like lending, financial services, and then with subset of that to lending, and then a subset of that to business lending. And you get that specialty and you get that depth of understanding. Those sparks kind of start to grow over time. And I also lived in many different parts of the world and ran businesses in many different parts of the world as well. And those also give you different perspective and different angles. And when you kind of add all that together, you just start to identify the problems and the ones that are most exciting to you and that inspire you, and that you feel that the world needs the most. And that's what's kind of led up to Linflow. So I had a few companies before, was all bootstrapped, and now I'm building Linflow and excited about the mission and the vision that we have here.
One of the things I really wanted to kick off our conversation here today, Jon,
Mhm.
on was can you explain to our audience, for those that don't know, what embedded lending is and why it's gaining so much traction in fintech right now?
Sure, happy to share. So, well, it's gaining so much traction relative to what? It used to seem like it was gaining a lot of traction, actually, but maybe it's not compared to something like AI, which seems to be moving at such a more rapid clip. And so, on relative terms to that, it seems to be moving a lot slower. Actually, I anticipated maybe it to be moving even faster, but I think AI will also be a big accelerant for this as well. And we're starting to see that. Maybe with their powers combined, we'll really start to get where we think we should be at the right speed. Embedded lending is about embedded finance in general, is about reversing how things were done before to how a better way they could be done in the future, ultimately. And because of that, creating a much better customer experience for the end user. And that's ultimately what it's all about. Right. And so if you think about, let's start with how things were done before. Right. Well, if you're a lender and you want to give a loan to someone, let's say, or you have a financial service, well, you're essentially before it was brute force. What would you have to do? Just contact them. I don't know, email them, message them, put up billboards, every commercials, and just bombard them at all different times at all different places. Call them, and maybe that's annoying and it gets frustrating, right? Because you're hoping that maybe you just catch them at the right day at the right time, or that they happen to think of you because of recency or because you were prevalent enough in their life and you came up enough times. But that's highly inefficient for the lender, right? That makes the customer acquisition very high, and it's also a frustrating experience for the user. I think anyone can resonate with really anyone who's had to go through the process and are being bombarded with messages or spam or anything like that. And so that force method just creates a lot of inefficiencies on both sides, right? And which leads to a degraded experience. And so what embedded lending is about flipping that. Right. And taking the great loan product and letting the financial service company focus on building the best possible product there in the most efficient way possible as well, which is the other part of Lendflow, the operational efficiency, where the embedded component is primarily just about distribution. And then it's bringing it to where the customers are. It's bringing it into that context. Right. And so now it exists within an environment where the data exists and the context exists, where you know when it's the right time for that loan product to present it and at the right place. And that's better because now if you're a user, well, you're in that right time and right place. And there's the thing that I need. And it's easy and fast and seamless and efficient and affordable and all of those things, because you didn't have to waste all that money on the cost acquisition, and you didn't have to, because of maybe AI that's coming in or other innovations. It's much more efficient and fast and seamless. And so now it's a better experience, and it's where you need it when you need it. And that's really what embedded lending, embedded financial services is about.
And Jon, you mentioned earlier about embedded lending was gaining a lot of traction. But then something that's been gaining a lot more traction recently has been AI. So I wanted to ask you, how is AI reshaping access to capital today, particularly for SMBs that historically struggled with financing?
That's right. It's been, it's accelerating. And you can see how it's going to have a profound impact, certainly. And you're kind of on the pathway there. But you're right. Embedded lending and embedded finance was the hot big thing. That was the AI back in maybe 2019, 2021. And you're in that was the huge thing. And then that's the nature of the game. Things shift, and there's the other hot thing. But also, what you have to realize is that sometimes it's a combination of things that actually gets to the real end results that you all envisioned at the outset. And maybe you weren't wrong to think that was the outset, because actually embedded financial services, and especially embedded lending, may move to the bottom of the stack as far as things that others who invest in those things are interested in, because the outcomes weren't what they expected, and maybe they don't understand why, and it wasn't the right time or place for it, and but maybe now that it is. So that's very exciting, and that's kind of where we're at now, where you bring these converge these together, where now you have AI that's solving the operational efficiency challenges. Because when you're going through a loan process, there's a few things that are also frustrating. It's not just about the outreach and like getting to the right place in the right time for the right loan. It's also about, well, what happens? What's the application experience like? How are you engaged? What's your touch point? And how is that different across your industry, or the product itself, or the credit spectrum that you exist on, or the size of the products that you need, right? And maybe that experience is very different across all of those. And it is because it has to be, because of resource allocation of the counterparty, which is the lender. If you're this little guy, you can't get the same access to the same products, and you can't get the same level of service, even if what you're building in your environment and your world is the most important to you, which it is, of course, because everyone has to start there, right? Then there's no choice. Everyone has to start at the beginning and grow something. So we all have to go through that. And that's very challenging and frustrating. And if that's eliminated, then more great things can be built, and there's less friction, and there's more ability to create. And so that's really, really powerful. And that's what it really means to like democratizing access to credit. And sometimes it's overused and misunderstood, or not used in the right way, I feel, but that's what it really means. And so what AI allows you to do is, well, now anytime you apply, you can have AI communication layer instantly giving you white glove service that's actually better enhanced, because now that AI can have context for all prior conversations, all data on your application, all inputs, all data from third party vendors, all data from the platform or system or brand that you exist within if you're embedded, right? All at once, and can use that information to give you a specialized um, experience that even a human wouldn't really be able to do. But if there is a human required, the AI can always send you there. It has the tools to transfer you to the human, or get you to where you, or escalate, and it can do all of these things. And so that's what we're seeing. And you start with the lowest hanging fruit, and you start with and then you expand outside of that, because there's many different touch points along the entire process where this needs to be done. And it's about bringing them all together into one great magical experience for the end user.
Now, John, why are fintechs, lenders, vertical SaaS like platforms, why are they increasingly turning to technology rather than marketplaces to streamline SMB credit delivery?
Are they doing that? But what makes you think? Well, let's start there. What
Yeah.
makes you think that they're doing that? Let's understand your context of why you think that's the case, and then let's go from there.
Well, I mean, I interview a lot of companies across the space. It seems like, I mean, maybe saying they're going to marketplaces isn't the best thing, but it seems like more than ever before, we position ourselves towards technology. And I guess it makes sense, right? Because we're able to streamline things across the board. AI has really changed the game there. Trying to see where to.
I think I know what you mean.
Yeah,
I can
yeah.
dive in here.
If you know what I,
Let me
yeah.
let me try. Let me try here, and then let's see. Tell me if I'm off base. Just cut me off as needed. So when you think about that merging, as we talked about the merge of like technology for lending, and financial services and AI, right? Okay, that's a combination. There's another combination that you mentioned, which is financial services, and maybe a loan product that you issue, and technology, or maybe that with AI and some combination there, right? And what you're talking about is a marketplace versus to just directly accessing the product from the source, from the lender. And so, well, if you look historically, the combination of technology and loan products has not turned out well. And that's another reason why it's at the bottom of the stack of interest for people who are investing and allocating capital to those things. And the reason is because of a misalignment of incentives. And that's something early on through my experience with in the lending space prior to Lendflow recognized as well, because there's the you want to grow, right? And to grow, there's levers that you can pull, and there's many levers. as far as customer acquisition, right? And different marketing channels. But also, there's some other levels that are a little bit more dangerous, right? Those are risk levers, right? And maybe you open your credit box, or maybe you launch a new type of product, or maybe you expand into a new industry where you don't have expertise. What are those other ways that you're going to grow? Right? And you have to explore those and go those. And if you go that way too far too fast, which you're incentivized to do by the nature of venture capital and getting more resources to build more quickly, it's of course you want to scale as fast as possible. That's a misalignment of incentives, because in credit, that's what leads to your downfall. And that's what happens, right? And that's why that combination hasn't been effective. And so for us, what that means is that the financial service and the technology should be separate, right? And independent. And because of that, that means that for us, it has to be a marketplace. And that solves other problems, right? If you're going to one product, if you're a person who exists in the world and you want a loan, you have a massive amount of information asymmetry of where to go to get that loan. What's the best loan for you? Where are you going to go to get it? Is it an auto loan? Is it an asset backed loan? Is it a line of credit? Do you need to draw it? Do you need it for 30 days? Do you need it over 12 years? Is there what kind of assets behind it, right? What is it going to be used for? How is it going to be used, right? There's all of this context, and then you don't know what you need to do as a person and as a business to get approved for the best product, even if you could find the best product. So you see the problem? There's massive inefficiency there. I don't know where to go, and if I did know where to go, I don't know what to present to put myself in the best position to get the best product that I need. Right? And there's massive information asymmetry there. And if each individual lender is building their individual thing, well, they're all going to have to independently communicate to the market and to the world that they're the best. And so that means the user is going to have to go to each one individually, independently. And now they're going to have 20 people calling them and 20 different processes to go through. And that's also very inefficient. So now the problem still may be solved in some ways, right? But not in many very meaningful ways that are very important. And so when you say people are going to lending, that's because it's easier, right? That's because it's the simpler path. That's because it's the path where if you don't have perspective, that seems to be the right one. And that's why everyone has taken it and took it and will continue to take it. I mean, I guess unless they just trust my words, but usually that's not enough, and you have to learn from experience. So that's why we went the direction that we did. Right? Let's bring all of the lenders into one ecosystem, and let's build the routing layer so that when you apply through one system, you get access to the best product for you based on the context and input that you've provided, which is your business, who you are as a person, your credit score, what you're using it for. All of that can use to be a translation layer into the right product, and then making that product deliver in the fastest, most efficient way possible at the lowest cost of capital possible, because all the efficiencies that are gained through all the tech.
Now, John, I know you have three main products, right? Lendflow Connect, Intelligence, Automate. I want to give you a moment too for my favorite people to reach whenever we have someone on the podcast are the people that are maybe just hearing about Lendflow for the first time. So can you tell me the types of organizations that kind of fall into using each product, or what you've learned since launching these products?
Certainly. Well, the latter is pretty broad, and we may have to extend this podcast to a 24-hour marathon
We'll just have to
to
have you
cover
come
all
back
of it.
on
So
some other time.
yeah,
So
maybe we'll have to come back for some of that. But yeah, I'll give some examples because I think that's important, and then we'll go through some learnings. And it's just there's so many that it'll be impossible to cover all of them. But maybe we'll go through some key ones. One great example is BHG Financial. They probably do 600, $700 million in loans per month. So I'm a pretty scaled lender, and very great product, amazing. They do many things best in class. So one great example there. So their problem though is a few efficiency and distribution, which are the two primary problems in lending. So yes, they have those just like everyone does. And so we help them been able to do is, well, before when someone applied, it would take them 2, 3 days just to get a soft approval, just to get the initial answer, right? Now for them, it takes under 1 minute, right? For as a user, you have this great product, but now you get it instead of 1 to 3 days, you get it immediately, instantly, basically. That's a big change and a big impact, right? And the next is, well, once you have the soft approval, how do you get that to a firm approval, to a contract, to actually the funds in your account? right? And there's all these additional steps and touch points that go into that that also take weeks and sometimes months, right? And this is true with all bank loans, right? This is a bank loan product, right? So this is upmarket product and one that's harder to acquire and upmarket. And really, basically, they focus on practices like medical practitioners and professional services and things of this nature. So, but it's a great example because it's an awesome product. It's just how do you solve some of those problems? And the next one is distribution, right? They have to do that very inefficiently. Like we talked about brute force. And so they recognize and we've recognized together that, well, if you can go and take this product and have it live where your customers are, the best product in the market with the best experience now can go to them and they don't have to seek out and find it themselves. You're just putting it in front of them at the right place at the right time. Now, and you can do instead of one of those at a time sequentially, and then the next, because of resources, you can only do so many partnerships. What if you can do all the partnerships in parallel at once? And what if you can take that product and put it where your customers are at the same time? And that's what we've been able to accomplish with them as well. Right. And so I think that's a great example and highlights a few of those things, the problems we've identified and what we're doing to solve them. And then there's others who are doing the same thing with, like Innova, right? Who also has consumer and commercial. BHG also has consumer and commercial. And we're doing a lot of the same things with our brands like On Deck, right? And embedding that into different accounting systems and into different platforms and different apps and different bureaus and I mean, everything like that.
Before we wrap up here, John, just want to hear in terms of what's next for Lendflow that you want to share with us here today.
A lot more of the same of what we discussed, just deeper, right? And so there's an AI and technology. You can go a mile wide and an inch deep and try to cover a bunch of different use cases. And that's the strategy. You can also just specialize in what you know best and deliver the best possible experience and go an inch wide and a mile deep. And so you can expect from Lendflow to see us just laser focused on providing the best possible embedded lending experience that we can and in as many places as we can as fast as possible. And so that's what you're going to see from us. That's what we're focused on. That's what we'll do.
Love it. John, I want to thank you for joining me here on the podcast. We do need to have you come back on, cover some different topics. We'll take a look at what that looks like. Thank you so much. Thank you for all that you're doing and congrats on all the success thus far. Be rooting Lendflow on from the sidelines.
Awesome. I appreciate it. And looking forward to see you next time. Thanks, Jared.